Hey traders, welcome to Charts and Coffee. Happy Friday, everybody. Hope everyone is doing well. It's been a heck of a week, and NVIDIA has basically reminded us all of a couple basic things. One, don't bet against strength. Two, don't pick tops. And three, we've got a dovish pivot coming. And for traders waiting on calamity and chaos to break out, kind of tough when we're now seeing the last of the Magnificent Seven rocketing higher. We saw all tides just sort of rising with this last earnings release. And then as we look forward, and remember, the market is always a forward looking machine. It doesn't care what happened yesterday. It's not even thinking about what's right around the immediate corner. What are we looking ahead to? And if we're bonds, we're looking ahead 6 months. If we're equities, it's nothing for equities to look ahead to in 3 months. And when we look ahead, what starts to come into focus is that the Federal Reserve is going to cut rates. I was on Benzinga this morning, and they asked me a great question. What is the likelihood we see no rate cut? And I go back to the data, right? That's all we can do as traders. Go back to the data, look at the Fed fund futures, where traders have taken their futures accounts and opened positions in something called the Fed fund futures. It trades on the Chicago Mercantile Exchange, and that's what yields this information. Actual trades, not someone going on television and talking about hypotheticals, right? I like to look at traders who are actually putting their money where their idea is. And right now, that money says we're holding in March. We know that. I think Jerome's 60 Minutes interview pretty much said we're not hiking in March. And now we have very little expectation, or sorry, not hike, sorry, cutting in March. And in May, also very low percentage, 21.7% expectation that we're going to cut. So not really probable. And then we move out to June, where this is where Fed fund futures traders have said, but at this point, how many more PCEs, CPIs, NFPs, jolts, how much more data will we have had for the Federal Reserve to see that inflation number is not just holding, but maybe continuing to improve? So all we've done is just push this back so the Fed can get a little bit more data before they cut. But as long as June sits like this, we're there's slightly more expectation for a cut. Are we going to get a cut? Yes. Are we going to get it sooner rather than later? No. Right? And equities are gearing up for that. And as far as the number of cuts, a lot of folks have asked me, how many cuts, right? Not that many, interestingly enough. Actually, not that many. If you go out to December, take a peek. What we're looking at is, where will rates be in June, right? We're expected to be a quarter point lower. That's mostly the probability. Although, let's face it, there's a 35.5% expectation of a hold. So we're not out of the woods yet, but gosh, June is so far away. But by the time we get out to December, again, this is February 23rd. But right now, you could see how many cuts are factored in. So we're expected to be anywhere between 3, maybe 4 cuts, right? So anything else is speculation. This is far more what I've observed the Federal Reserve will pay attention to. Because as I like to say, when they open up their Bloomberg terminal in the hallowed halls of the Federal Reserve, they know what we're expecting. They know. They can look at the data too, right? We can look at the data they're looking at as well. Remember, when they look at inflation, they're looking at the PCE. So remember, they're not looking at how much it costs to get a pound of ground beef and milk and gas and homes. No, they're looking at a completely different calculation. So as long as we're looking at the data they're looking at, we can understand the models they're thinking from, and let's remove anything as far as they should or they can't. They're going to do what they will. We just need to find where those little breadcrumbs are along that path. So that's where we sit here. It's tough to be a bear, please. As I like to remind myself, we don't hate our money. right? We are looking at higher highs in the NASDAQ, higher highs in the S&P. This is not the time to ask, my gosh, this is not the time to ask, has the market gone too high? How many traders have asked that, and instead of buying the dip on the 31st or buying the dip on the 22nd or back on the 4th, have said, well, the markets are too high and this is now a correction. It's been wrong every time. Please, please, please remember, if you roll higher with the trend, just follow the trend. First of all, identify where the strength is, right? That's what I mean by trend. Buy the sale, buy the sale, buy the sale. Eventually, when that retracement does turn into a reversal, what are you and I sitting on? Well, we can then hypothesize we're sitting on a nice amount of realized profit. And when we finally do have that one last trend trade, that then could be a small loss, right? But we've been doing what? We've been building our accounts in the interim. That's the important thing. Don't keep the, oh my gosh, what if, from keeping you from buying the dip. Because yes, eventually it will pull back, but it hasn't yet. And it hasn't now. And, we've been bullish since what? April of last year. So let's stick with following the trend. And what's that saying? Follow the trend till it ends, right? The trend is your friend, whatever else rhymes with that. So that's what we're going to continue to do. All right. So please, please, please do not think that top picking is a strategy. It's not, right? Take a look at the S&P, right? How does it, look, 5,100 on S&P futures. If people ask, where's it going? I don't know. I don't know. Nobody knows where the top is. That's another thing the guys asked me at Benzinga, what do you think about where the targets are? Don't know. Don't care, right? I hope it's infinity. I'm long, right? I know a lot of you are as well. And so now my main concern is, where is the support on the pullback? So take a look at the daily price movement ranges here. Anytime the green meets the gray, green meets gray means go, right? Buy the calls. And we're going to continue to do that. Okay. All right. So that is it. Pierre asked, what would be a good entry point on now for a long-term investment? Okay. So Pierre, I don't know what long-term is, right? Because that can be kind of subjective. But for me, long-term is something we do in the Sector Secrets Mastery once a month. And that is, we pull up the weekly time frame and we look at a time horizon. So time frame is the interval on your chart. Time horizon is, well, how long could I possibly be in the trade? And this is going to be a 6-month minimum, hopefully many, many years. And let me show you what I'm looking for. And then when it happens again, you know what you're going to do. Take a look at, on a weekly, the kind of action we saw in September. So the end of September to the end of October. See that action there? Pulling back, Darvis support. I've got my mean reversion at the 34 EMA. We're still above the 200. So that means the next time I'm open to doing this would be about 650. I'm not in this, but the next time I would be saying, hey, there's possibly a weekly time frame mean reversion. It's going to be that same situation. I can't buy it here, right? It's up near highs. Yeah, I can't buy it here. I hope that makes sense, right? I cannot buy higher highs, because what that does is puts me in a position to be at the mercy of anyone who thinks that where I bought from is just the kicking point to higher highs. And it isn't always, right? Or as I like to say, and many people do, it's not my ism, but I love it, Wall Street's the only place I throw a sale and nobody comes. All right. So next up, and these are the kind of things, and I love talking to the guys over at Benzinga. If you haven't checked them out, that interview that I've done in the past, I'll be posting that over on my countdowntrader.com later on, probably next week. So if you missed it, the guys are great. I have such a good time with them. I love what they're doing, kind of like what we do here. Let's work together. Let's find opportunity. Let's not get caught up in, whatever is everyone else is talking about, where are places we can manage risk and find opportunity. Speaking of finding opportunity, my Sector Secrets Mastery folks, we continue to manage American Express. That was our swing entry this week. This is what, the third or fourth time we've been at American Express in the last, 6 or 8 weeks. We're going to continue to be bullish in financials, big banks. And whether that be XLF itself, American Express, JP Morgan, Visa. When we've got a small, a strong sector, right? And remember, the XLF is no small piece of the S&P. If you're wondering, yeah, what's with the swagger in the S&P? Look no further than XLF. In fact, when XLF is in fuego and XLK technology, Apple, Microsoft are in fuego, that's going to absolutely disproportionately benefit the S&P. And we're going to see that here today, crossing over 5,100. And no small part is the strength we're seeing in financials. So remember, those individual pieces of the indices tell us a lot about what cylinders, right, are firing within them. All right, Rick says, I love that old saying. Rick, it's so true, right? In no other part of our life do we say, oh, wow, something's more expensive than it's ever been. And it's never going to be this cheap again. We must buy. It's an interesting psychology. It seems to be quite unique to behavior in the stock market. Nowhere else do we say, gosh, my favorite apples are the most expensive they've ever been, and they'll never be this price again. They're only going to keep going up. I better buy all the apples I can. I mean, that's really what happens. So buying at higher highs to me is that psychology, which again, we don't do in any other part of our life. Go figure. All right, moving on. Let's see. Do I have any thoughts on Melly? I don't know. Let's take a peek. It's got all the hallmarks of something that has the opportunity to continue to move higher. It's not a stock I trade all that often, but Darvis support level pullbacks seem to be doing pretty well. So I would stick with that. Yeah, for sure. Yeah, you look at software like IGV. Yeah, IGV. You look at where certain stocks are weighted. In terms of weighting, remember, if we're looking at most of these ETFs being constructed in a high concentration way, meaning a very small number of stocks have a disproportionate influence, which is how most ETFs are constructed. You look at an ETF that might have 60 stocks in it. Usually, less than 10% of those stocks make up over 50% of the weighting. And so it's usually a very small number of stocks that are going to dictate where a broader average goes. I mean, case in point, when you look at NVIDIA, why was that such a big deal? Top 3 weighted stock in the XLK, number 1 weighted stock in the SMH. There's a reason why SMH started going higher. There's a reason why a lot of other stocks weighted within the SMH started going higher. This is what a rising tide looks like. Yeah. So, all right. Next up is X. I haven't looked at miners in a while. I would have to step out, Ajit, to XME or SLX. And, if I'm thinking index sector stock, if I'm thinking about the individual piece within a broader group, I'd like to see XME and SLX oversold at Darvis support before I do anything in the individual components. I don't mind to wait, but I would be bullish. I don't mind to wait, but I would be bullish. I'd like to see the alignment in an XME for sure before I do anything. And frankly, it may not be X that I'm interested in, right? If I crack open the XME and I look at, all right, what else is there, right? And I love that you're asking, because sometimes an individual stock cracks open a sector and then we can start to go through the relative performance process of trade this, not that. My biggest issue right now is that when I look at the top weighted names in the XME, especially Newmont, look at the weakness in the top 3 weighted names. And I'd like to see that simmer down. I've been in and out of Freeport-McMoRan in the past. I haven't played this corner. NUE looks great. So there are some relative outperformers, but what a mess, right? What a mess. When the top weighted names are heading lower, remember, those high concentration weighted names put pressure on the lower weighted names in that group. So that's something to always be aware of. Thank you for the question. Definitely something I'm interested in. I would put it on the back burner, but not yet as far as getting in, but definitely interested. All right. Next up is, do I have a target in Visa? Do I have a target? As far as where it's going to go? I mean, I'll look at my daily price movement ranges, but here's the thing. And to talk about targets without entries is a very dangerous thing. I actually loathe analysis that I know it's tough, Rog. But I do. I hate when people just talk, well, this is where it's going. But how is the path to that level? Right? So my resistance is around 51.50, right? Which is in terms of volatility, is not only my favorite Van Halen album, but it's also where resistance would be today. But as we move higher, that volatility resistance will also move. So I don't really have a target. What I do have is where do I want to get long, right? More important than that, on Visa, and that's S&P, right? Let me go to Visa. So if I start with the S&P, then what's that going to take me to? XLF. So let's go index, sector, stock. All right. Well, 5150 is resistance on the S&P. Then I'm going to take that over to XLF. This is where Visa would reside. Okay. So let's go there. Okay. Where is my resistance in Visa? Oop, how did I get way over here? There we go. Where's my resistance in Visa? Well, where's XLF resistance? It's going to struggle to about 40.50 maybe. We're at a resistance level right now. So when I find resistance in those bigger components, lastly, I'm going to get to Visa, right? And so Visa is going to start to run into trouble the same time the S&P and the XLF likely do as well, right? So where the target is a little less important than where is the support. As long as I can keep bouncing out of the gray zone, I don't want to scale out too fast. Case in point, where I do have some skin in the game, American Express, which is related, which is a related conversation. And so when I look at American Express, now we have March 15 expiration here. I know where the resistance is, right? But I'm going to keep focusing on the gray zone because as long as that support stair steps up, that's actually what's the most important part of a trend higher. Not where the resistance is, but rather as we're moving higher, is that support tracking with it. So this is a position we have. What's interesting about American Express is we were able to poke through that Darvis level, which should be a pretty good harbinger for higher highs to come. Doesn't have to be today, but in general. So that's how I break that down. Start at the top and ask yourself, what's going to prevent Visa from moving higher? Right now, not a whole heck of a lot. We've got very healthy trends there. All right. So I hope that makes sense. And remember, gang, in terms of, the merit of being bullish right now, it's not that I can be bullish, but not be buying at current prices. Please remember that. I think most of the time when traders say I'm bullish, it's just communicating that I have a desire to find a long setup. I want to find a way to get long, right? Buying is different than being bullish. I'm bullish American Express, but I'm not going to buy it, at 214, right? I'm bullish American Express. We bought it on the 21st, right? I'm waiting for moves down to this area. That's the difference. Or we're looking for moves like on the 20th, moves down to this area. So gray is where we buy. Gold is where the resistance could be. That could be a target, right? But please remember, if I'm bullish American Express, it doesn't mean I'm buying it where it sits. It means that I would like to find an opportunity to trigger the buy. That's typically going to be at these volatility levels that are mapped on the chart. And of course, Visa would be no different, right? Visa would be no different. All right. That being said, let me at least take a quick peek over at the NASDAQ before we wrap up. Again, here we are, gang. Weren't we supposed to be tumbling and crashing and having an awful February to April? Probably not, gang. Remember, there are three things that you're going to hear a lot of. The election cycle, which is bullish. The dovish pivot, which is bullish. And this February to April seasonal cycle, which happens to have also in the last 5 years, if that's the seasonal look back you're looking at, have two of the most chaotic, swiftest sell-offs in the history of stocks. 2019 Q1 and of course 2020 Q1. So when we look at those seasonals, we look at those two events built into the look back of the last 5 years, that's a little skewed to two of the worst sell-offs we've ever seen. And so that being said, do I have this February to April seasonal fear? I don't. These are still uptrends that are heading higher, S&P and NASDAQ. We still have the XLF. The XLK is going to be a little tricky. We really would like to see Apple get out of its own way, right? If that starts to happen, which it is, look out, gang. It's going to be very difficult to be a bear in sectors like XLK, SMH, XLC, XLF, and keep an eye on XLV. All right, that is a wrap, gang. I will see you all on Sunday for the top tier outlook. All right, gang. I'll see you then. Be good to each other.